to the weekly roundup for the week ending Friday the 13th of November. We hope you're enjoying these weekly roundups, and please don't forget to subscribe to receive regular stock market content. Also, if you've got any questions, pop them in the comments box below. We'd love to hear from you. And also, we'd like to welcome you to follow our free stock market reports on tech stocks, banking stocks and IPOs by using the link in the descriptions below. So this week, the stock markets have rallied again. Not only did we find out that Joe Biden has won the US elections, but we also received a report from Pfizer, who announced that their COVID-19 vaccine candidate, which they'd been developing with BioNTech, was found to be 90% effective in stage 3 clinical trials. Now, this is an absolute game changer. This means that there is light at the end of the tunnel and that there is an end in sight for the COVID pandemic. Stocks have absolutely surged. We've seen European indices hit an 8-month high, and we've seen this move towards sort of the travel, leisure, tourism. Those stocks which were really hit hard by the COVID pandemic have been those that have been gaining the most here in Europe. Over in the US, there's also been a strong rally. What's been interesting there is we've seen that the Dow Jones has really picked up. It's traded up 3% across the week, whereas the Nasdaq, the tech-heavy index, is actually down 1.6 on the week so far. And this is because what we've seen is a rotation out of those tech stocks, stay-at-home stocks, which have really surged through the pandemic, and back into value stocks, which is why the Dow's managed to push on higher. Towards the end of this week, though, we have seen that the mood has just soured slightly. Well, it certainly did on Thursday, and that's because whilst the coronavirus vaccine now appears to be just around the corner, coronavirus case numbers are actually increasing, and really quite substantially. In the US, they recorded 150,000 new cases on Thursday. Here in the UK, we also recorded 33 new cases. Now, concerns are that the US is going to tighten lockdown restrictions, which is going to have a heavy economic impact. And also here in the UK, we could indeed see our lockdown restrictions extended. So what's happened is there's this realisation by the market that although there is a vaccine in sight, we've still got another 4 to 6 months to get through before that's going to be widely available. And those 4 to 6 months that we're facing could actually be very difficult, not only health-wise, but also economically speaking. Pound has performed pretty well across the week. In fact, it rallied across the first 3 days of the week on the back of rising risk sentiment. However, on Thursday, the pound took a heavy hit, down around 1%, after data revealed that the UK economy grew 15.5% in the third quarter. Now, this is a record-breaking expansion, comes after the record-breaking contraction in the second quarter. However, the data also showed that month on month in September, the economy grew just 1.1%. That was down from the 2.1% in August. And so it just showed that the growth was starting to slow even before the second lockdown has taken place. So that doesn't actually bode well for the coming quarter at all. In fact, a double-dip recession is almost pretty likely. There have been some huge moves on stocks over the past week. As I said previously, it's those stocks that were worst hit during the coronavirus pandemic which has performed the best across this week. So I think airlines, travel stocks, hotels, they've really outperformed. If we think about British Airways parent owner IAG, they've soared 40% across this week on the optimism surrounding the vaccine, and that travel in the skies will be able to pick up fairly quickly once that vaccine is broadly available. Rolls-Royce, the engine maker, they are up 36% across the week. Again, they're very strong links to the aviation business, and planes taken back to the skies would bring in revenue streams which have basically just come to a halt over the past few months. Banking stocks have also done very well after a very difficult past 6 months. Lloyds was up 27%, and this is on the back of the improving picture for the UK economy for when the vaccine does become available. Retailers have been quite a difficult, retailers have had a very difficult 6 months as well. Now I think retailer AB Foods, which is Primark owner, they're up 20% across this week, and they've had a particularly strong boost because let's not forget that Primark doesn't have an online offering. So what that means is when the UK is in lockdown and Europe is in lockdown, then Primark is not receiving a revenue stream at all, whereas some of it or many of its retail peers do have an online offering, so they're still actually managing to make sales even during lockdown. So AB Foods stands to gain a lot from a vaccine being released. Over in the US, I talked about this rotation out of those stay-at-home stocks that we've been that have really rallied across the past 6 months. Zoom was a huge faller, they're actually down 14% across the week. Peloton, they're also down across around 13% across the week. And we've also got Amazon, they've had a pretty hefty fall as well, not only on the back of this rotation out of tech, but also because the EU started an antitrust or processed an antitrust case against them, and this basically looks at the dual function of Amazon as not only a marketplace but also a vendor. Now the accusation is that they've been using data that they collect through the marketplace part of the business in order to compete more competitively versus their competitors on that same website. As I said, please don't forget to pop any questions you might have in the box below, and to subscribe to us, and have a great weekend. Thank you.